Good afternoon and welcome to this webinar on global investing opportunities for Aussie investors uh, with Tiger Brokers. And welcome to all of our audience from Tiger Brokers as well. So before we get started, a couple of introductions. My name is Prashant. I head up the marketing team here at Sharesight, and I have with me my colleague, Ricky, who heads up the customer team here at Sharesight. And thank you all for joining us this afternoon and giving us the opportunity to talk through some of the opportunities, challenges, and solutions for global investing as a whole. Firstly, some housekeeping disclaimer. This is purely for information purpose only, does not constitute any specific product recommendation, taxation, or financial advice, and should not be relied upon as such. So all of the screenshots and potential logos you might see over here are purely for informational and educational purposes only. And any sort of tax reports you see are purely from the purpose of demonstrating the software rather than actually any kind of tax advice. Okay, so we've broken today's agenda into a few parts. As you can see, first we'll do a bit of a setup on why go global, some ideas on the key markets and sectors, and then like how do you actually access these global markets, and what are some of the tools for global investing, including trading platforms, and the portfolio tracking and analysis, and then potentially looking through some of the common pitfalls that are involved in global investing. And we'll definitely go into sufficient time for Q&A and any form of discussions. You can ask questions through the questions part on the tab that you can see on your on the webinar platform, and we'll try our best to answer them. On to the first topic, which is on global investing for Australian investors. So one of the key charts that I really like looking at is why bother investing in the global markets? After all, we get some really good dividends in our local Australian markets, which performs well as well. But what's the point? And here's a little chart that shows where the ASX stands compared to some of our global peers in terms of the market cap. So purely in terms of accessing opportunities and be part of a much more global crowd of investors, we want to be part of the global markets. Both Ricky and I invest in the global markets, and yeah, that's the whole idea. You can see there that there are lots of exchanges far bigger than the ASX, a lot more companies that are listed, and that gives us a really good opportunity to access those markets. So sort of similar to the previous slide, one is the size, two is really to build a risk return expectation. You want to gain exposure to certain industries that are probably not accessible over here in Australia, at least directly not. And we'll go through some of those things. And the other part of it is simply, what is your return? Now, this chart shows actually the overall growth of $1 invested way back in January of 1871, and its worth over the few years. And as you can see, you've got various blips and crashes, and then eventually it all recovers and keeps heading in that direction. Again, that's just generally, you do want to look at the future growth and investing as such. Okay. And coming back to a particular asset class, now this is a chart from our friends at Morningstar. What they do is actually look at various asset classes and the best performers in each of these calendar years. And you can see here that the Australian market has a different position. We've just concluded the Olympics. We are not the gold medal winners or silver medal, even silver or bronze medal winners in any particular year. So every year, the type of asset class that is accessible directly via the ASX is actually at a different position altogether. And the returns vary as well. So picking a winning asset class is hard. Definitely picking a market or a country is actually even harder. In that case, we showed how the Australian share market performed. This is particularly Australian equities, and how hard it is really to pick who the best returning country would be. And you can see some of those annualized returns over there. And it's the same thing. You can see, even though what you hear in the news every day is, S&P went up and the ASX goes up, the ASX goes down, or S&P goes down. But over time and the compounded annual growth significantly varies from one market to another. And that's another reason why it's a good idea to have a mix of various markets in your portfolio. Strategies and investing vehicles. Just getting into how to access international markets. You can pick individual stocks. You can see the logos of the companies, some large companies. So you definitely have Apple, you've got CrowdStrike and Tesla and so on and so forth. You can access through ETFs or mutual funds that are available on the Australian Stock Exchange. That is built by fund managers over here in Australia. Or you can go through depository receipts. Say if you want to access a Chinese tech company like Alibaba, it's actually listed on the NYSE as an American depository receipt. And you can see there, that's another means of accessing those sorts of global markets. And you can access them through various investing platforms, including Tiger. And that is where you will be able to actually trade and invest. And the sectors invested in are different as well between the markets. So as you can see, the ASX has a very heavy weightage towards the financials and materials, basically mining, whereas the S&P has a very high weightage towards tech, followed by healthcare as well. So those are some of the larger sectors. So you can see there that by diversifying just between these two markets, you're able to access various sort of sectors of companies as well. Looking to actually how you would go about, and this is one of the things that you need to watch out for, is as an Australian investor, you're accessing a market that's listed in US dollars, and you need to look for the third sort of driver of performance. So one, you've got capital growth. Two, you've got any sort of dividend performance. And three is really around the currency fluctuations or what have you. So that's something that is really important to watch out for. Now, there are a lot of ways in which you can access, including hedging strategies that some of the funds use. So this one in this case is a particular fund that has a significantly different fee structure depending on whether you're hedging against a particular currency or not. So that's just an example of what that looks like. How do you access the global markets? And this is where we just wanted to take a sneak peek into what were the top instruments that our Sharesight users accessed in the month of July. And the point of this is just to see, well, people are actually accessing these markets through multiple means. So you can see you've got BGS, which is an international index of mostly advanced economies. You've got VAS, which gives you access to the ASX. And you've got the S&P 500, which is IVV, followed by NDQ from BetaShares, which lets you access the top 100 companies on the NASDAQ, and so on and so forth. And you can also see some direct listings that are foreign owned, that are listed abroad, which is in the form of NVIDIA, or you can see Tesla there. And one of these months, I actually even spotted CrowdStrike there, so which has been in the news lately. So you can see here that our users have been accessing global markets through multiple means, as demonstrated. So either through an ETF that's domiciled over here in Australia, or directly those instruments such as Tesla or NVIDIA, and all of those other wonderful tech companies from across the globe, as well as you can see it's available through ETFs that are actually listed in other markets as well. So there's multiple ways in which Australian investors traded in. And we'll get into how specifically Tiger and Sharesight work together. And with that, I'll hand it over to Ricky.
All right, hey everyone. So I'll just gonna I believe there are quite a significant Tiger audience listening to this, and if you have a Tiger account and whether you have a Sharesight or you haven't started using Sharesight, so I'm just gonna quickly show you how to set up an integration between Tiger and Sharesight. So I'm just gonna jump out from here, and then I'll go over to some of the Sharesight reporting tools. So I'll just jump out of this. So you can see, so I have a Tiger account, so it's pretty straightforward if you want to set up your integration between Tiger and Sharesight, and basically just sync all your historical trades and all kind of ongoing future trades into Sharesight. So basically what you do is, go into your Tiger account, go to report, and under reports you have the tax report. You can call it a section. And under tax report, you can just see, there's an option to connect with Sharesight, Sharesight tax performance reporting. So just need to follow the prompts. If you don't have a Sharesight account, you can create a Sharesight account. But if you already have one, you can link that to your Sharesight account. And then they will take you to a page where you kind of authorize the access to your Sharesight account. So I kind of agree, allow Tiger access my account through Sharesight API, authorize that. And that would take a while. I think normally it takes about 1 or 2 minutes just to kind of get it done. So, and then it's done. So it's already connected. So that means I think it will take like 1 or 2 minutes to get all the historical trades from the Tigers into Sharesight and all the ongoing trade as you do your buying and selling. Obviously, you can change your settings as well if you have more than if you have more than one portfolios in Sharesight, you can, specify which portfolios that you want to kind of link it to. And you also can select the start date where you want to sync all your transactions from. So it's pretty straightforward, and it should be done in like 1 or 2 minutes. So that's it really. So it's very straightforward. There's nothing much you need to do after that. And the second one, I'm just gonna go through, just gonna quickly talk about, I guess, some of the Sharesight reporting tools, and that includes like tax reporting as well. So the first one I'll talk about is the performance report, so the portfolio tracking and reporting for your performance. So again, I'll just jump into the Sharesight account. So you can see this is what Sharesight looks like if you're new to Sharesight, this just kind of shows you the overview of all your holdings and your returns on the summary section. So I'm just going to show you the performance report quickly. I'm just going to save this. All right. So as the name implies, the performance report kind of shows you what is your investment return. So if you understand your investment return, you can kind of make a better decisions on what to buy, what to sell, right? And as the saying goes, you cannot improve what you don't measure. So Sharesight kind of give you the overview of an understanding of what is your true return. So what do I mean by true return? So there's two things when it comes to true return, right? So the first one of true returns means you get a sense of the total return of all the components. So all the components, which means the capital gains, dividends, and currency gains. So as you know, I guess everyone is familiar with capital gains and whatnot. If you bought a stocks at certain price, and then right now the market is selling at this price, that's your unrealized gains. But that is only just one of the components, right? So you also have dividends that makes up a big chunk of your total return, and as well as currency gains. And I guess from a global kind of, if you're investing in global markets, whether it's like in Asia, Europe, or in the US, currency gains and losses can be a significant source of kind of return, or that has a big impact on your entire portfolio return, right? So just a case in point, I mean, as you guys may or may not know, last month, Japanese yen had a significant appreciation against US dollar, about 10%, and against Australian dollar as well, about 15% within a span of 1 or 2 weeks. So that kind of event has a very significant impact on your portfolio from a standpoint of currency movement, as well as capital gains, as you know. When Bank of Japan decide to raise the interest rate, that has a very negative impact on both US markets and Australian market as well. So that's kind of give you a kind of true sense of how all these components kind of makes up your total return. So kind of give you a true understanding of what your true return is. And the other part of true return is Sharesight analyze your return. So what that means is basically Sharesight take into account not just what is your return, which is comparison between the current market price versus your purchase price, but Sharesight also take into account how long you've been holding those holdings, right? So why is this important? Is because so you don't comparing apple to oranges. So you kind of basically you can compare apples to apples, right? So what I mean by that is you might have let's say you might have a stock that's gone up 100%, and then you have another stock that have gone up 50%. With that context, you kind of think, okay, 100% is definitely doing better than the 50%. But if you take into account how long you've been holding it, you might have been owning that stock that has just went up 100% for the past 10 years versus the one that has just went up 50%, but you've only owned that for 6 months. Now you have a very, very different context where the 50% stocks actually is performing way, way, way better than the one that's gone up 100% because you own it for 10 years. So kind of having this annualization kind of give you a kind of apple to apple comparison, so you understand that when you're comparing your holdings and deciding whether should you buy more of this, should you sell more of that kind of thing, it gives you a kind of true sense of what your return is, so you can kind of make a better kind of decisions from there. So those are two things. And obviously the performance report also shows you a heat map. So I think some of you may or may not familiar with heat map, just a way to visualize your return. As you can see, the shades of the colors, kind of shows you the magnitude of the gain. So darker green shows a higher return, and obviously a darker red shows a bigger loss. And the size of the bracket, which is the box of each holding, shows the weighting of that holding in relative to your entire portfolio. So the bigger the box, the more kind of the more the weighting of that as a proportion to your entire portfolio. So that's the performance report. And I guess the next thing I'm just gonna touch on with is the tax report. So we have Sharesight has two tax reports. So which one is the CGT report, capital gain tax report, and the other one is the taxable income report. So I'm just gonna go through that very quickly. So just jump out. We'll talk about CGT report first. So I guess most people will be familiar with capital gain tax report. So capital gain tax reports pretty much reports all your capital gains, obviously. So when you import all your buy and sells, whether it's from Tigers or other brokers, when you push all your buy and sells into Sharesight will look at your purchase date, you look at your selling date, and Sharesight will calculate those and calculate your gains and kind of categorize that into whether that's like short-term capital gains, long-term capital gains, or even like capital losses. And Sharesight also, this is kind of for people that are investing in ETFs. So you also have things like non-discounted capital gain distributions and discounted capital gain distributions coming from ETFs as well. So all of this kind of goes into this report, and Sharesight would calculate, Sharesight would take into account all this CGT's discount if you have, if you have holding something more than 12 months. And so it's kind of makes things really easy, as in at the end you get a final figure where you just need to, basically copy and paste that numbers into when you do your tax return and file your tax return for the ATO, right? So I would say the two kind of good things with the CGT report is, I would say nowadays it is not a surprise that most people use more than one broker already. Like personally, I invest in ASX and US market. I have like 3 brokers really. So I mean, sure, I mean, if your broker provide tax report, that's great, if you're using one broker. But if you are using like multiple brokers, you might have to get like 2 or 3 tax report, and kind of still have to do those manual work of like kind of combining them together. So the good thing with this CGT report is you can have all your multiple brokers feeding into one portfolios. So all the buy and sells kind of comes into one report, and Sharesight just do the work for you and basically calculates, all these calculations and give you that one final number that you need to provide to the ATO, right? So that's one. And the second one is, I guess from a global investing perspective, is Sharesight would convert, when you sell your US shares or whatnot, international shares, Sharesight would convert those purchase and sell value into Australian dollar using the prevailing exchange rate. And so you would know that what your gain is in Australian dollar, right? Because that's what the ATO wants you to report, which is in AUD. So that's the second advantage as well. And I guess the last one is we also have the sales allocation method. So the sales allocation method is just kind of giving you kind of the options kind of to decide, if you are doing like partial selling and you have like multiple parcels, you can decide whether to, do like first in, first out, last in, first out, minimize gains or minimize CGT. So again, it kind of depends on your, I guess, tax strategies or goals. You can kind of select that, to fit what kind of suits you. And the other one I was just going to show you is the taxable income report. So taxable income report, which kind of reports all the dividends and distributions that you receive, whether it's from your ETF, whether it's from your shares. I'm just gonna set this to the last financial year, just gonna make it more relevant. So you can see here again, like once you push all your buy and sell from your brokers into Sharesight will look at, when did you bought those shares, and have you sold those shares or you still continue to own them, and Sharesight will kind of populate all the dividends into this report and into your portfolio as well. So all your dividend or distribution are kind of categorized into local income, whether there's like non-trust income and trust income. So trust income, normally you're looking at things like distributions that you get from ETF. And of course, you've got foreign income as well, so dividends that you get from international shares. So with non-trust income, again, Sharesight kind of breaks it down into each kind of components. So things like franking credits, all these things that you normally get with investing in local shares. And with ETF, I think I guess the real benefit of this report as well is if you invest in ETF, as you might not know, is really complicated when it comes to reporting distributions, because there's so many tax components that you need to report when you do a tax return for ETF. So things like AMIT, foreign source of income, CGT concession, and those all these things. So again, kind of Sharesight kind of makes it easy. So when you get your annual tax statement at the end of the financial year, Sharesight also get that from the share registry and kind of populates that into the system. So you can basically just need to kind of compare and check to make sure that they are all accurate. And then you are ready to kind of use the report. And for foreign income, again, this is kind of like if you're investing in international markets, Sharesight will kind of convert the dividends that you receive, in this case in US dollar, it will convert that into Australian dollar using the prevailing exchange rate. Obviously, you have the option to change that if you want, but otherwise, Sharesight just kind of do it for you. And you also have the foreign withholding tax. So that's something that you have to report to the ATO as well, right? And the last bit is just the income tax return. So we have this income tax return section that just kind of simplify all these things into all these individual labels that kind of matches up with the tax return form. So it's pretty much just copy and paste according to the labels and put it into the tax return form. So it just, again, kind of makes it like simplify the whole tax return process. And yeah, so going back to the tax reporting, so I guess the last one I'm just going to touch on is the unrealized capital gain tax report, and just some of the key things that how you can kind of use this report when you invest. So I'm just going to go to the unrealized CGT report here. Okay, so the unrealized CGT report, what that means is pretty much this report shows you all the shares that you owned, that you have, that all the shares that you haven't sell, and kind of tells you what's your tax liability should you sell them in a future date. So, okay, this is not a future date, so I'm just gonna set it. Let's say, just an example, if I'm gonna sell it in June 2025, what is my tax liability? So Sharesight will kind of summarize that. Similar to CGT report, which is it will summarize that based on the current market value and gives you what your tax liability is. So I'll kind of outline three scenarios how you can use this report, right? So the first one is the tax loss selling. So for those that may or may not know, so tax loss selling is pretty much you sell a stocks that is not making money, so you can use that to offset any gains, any realized gains that you have, in a sense that it reduce your overall kind of tax liability, right? So let's say you sell something because the share price has gone up, and then you think it is overvalued, so you sell the shares and then you realize massive gains. You can use this report to look at, okay, maybe at the end of the financial year, maybe I have something that I need to sell because it's not relevant, it doesn't match my investment strategy, or it doesn't suit my investment goals anymore. So I can sell them, and it is not making me any money. I can sell them, so you would use that to kind of offset that gains that you have to reduce your tax liability, right? So that's one way you can use this report. The other way is you can also use this report to understand the CGT impact before you sell something. So, you might say, oh, I need to sell something, but before I sell that, I need to understand what my tax liability is before I sell it, right? Because that might, change my mind whether I should sell it if the tax liability is pretty significant, right? So, and then you can use this report to kind of get some understanding, what would the impact be before you even sell that. And I guess the last scenario is more for portfolio rebalancing. So, whether it's, you might have like overexposure, whether it is in and one industry or whether it is in one stocks or whatnot, maybe the share price has gone up a lot over the past 1 year or whatnot. And then, your exposure on a portfolio level to that stocks is say 50-60%, and then you don't feel comfortable with that kind of exposure, and then you want to reduce that without incurring a significant tax liability, you can use this report to kind of rebalance your portfolio and figure out a way how you wouldn't incur a significant tax liability while you're doing that, right? So this report has many uses, but I think those 3 scenarios are kind of something that is more relevant to this audience. So that's the unrealized CGT report. And I guess there's a few more slides to touch on. So these are just some of the key dates. This is related to tax. Obviously, we've passed 30th of June, end of financial year. And this is for ETF as well. So in the next 1 or 2 weeks, we will have the MIT. This is the cost-based adjustment. So what I mentioned earlier, where we get the distribution tax component from the share registry and push that into your portfolios. So this should line up with the annual tax statement that you get from your share registry as well. So we'll get that in sometime in early September. And obviously 31st of October, that's the tax filing deadline for all the individuals doing tax return. And I guess the last thing I'll talk about is just some of the common pitfalls about investing, when it comes to kind of global markets, right? The 3 things I would say is, the first one is really the over concentration in familiar markets. When you think about markets, whether it could be markets as in ASX or US markets, but markets you can also means sometimes over concentration in a specific industry or sectors. So sometimes that can happen, especially when there's a run up in share price. And again, Sharesight has other reports like diversity or exposure report that allows you to look at your exposure to a certain market, to a certain industry, or to a certain sectors, or to each individual shares, so you can understand what your risk is, and you might decide to do a rebalancing if there is a significant risk in that sense, right? So that's one, and the other one is currency effect. So I guess when in the context of investing in global markets, the most significant currency movement is one of the significant risks, right? As I mentioned just now, when there's a significant movement, that will have a very significant impact on your portfolio return. So if you decide to kind of invest in global markets, that is something that you have to keep in mind. Obviously, depending on your investment strategy, right? Whether you are doing it for the short term and long term, currency can have like very significant impact, right? So that's something that you have to kind of think about. Some people would use some sort of like complex strategy like hedging and whatnot. So, and the last one is just kind of local regulations and taxes. So what I mean by that is mostly foreign withholding tax. So I guess if you have investing in global markets, you might be aware of this. So, if you invest in US markets, the withholding tax is 15%. So if you receive your dividend like $100, for example, 15% of that goes to tax. And that is on the assumption that you fill out the form called W8BEN form. So you have to complete that form every year, just so your withholding tax is 15%. But otherwise, it's going to jump to 30%. So yeah, so this kind of thing is like something that you need to kind of understand. And there are a lot of other cases as well where the withholding tax might be different. So just a case in point, I invest in Ferrari shares, which is listed in the US. And I only realized that after I invest in the shares that when Ferrari pays the dividends, the withholding tax is like 41%. It is not like 15 or 30% or something. It's 41% because I have to pay tax to the Italy government and I have to pay tax to the Netherlands government, and all adds up to about 41%. So again, those are kind of the things that sometimes you just have to be kind of do some research and be aware of, because obviously 41% is quite a significant tax on the dividends that you receive, right? Almost close to half of that. So those are just kind of some things that you have to be aware when you kind of decide to take a steps into investing in global markets, right? So I think that's it.
We might just look at some of the Q&A that have come about. If you have any questions, please feel free to ask us on the question and answer box over there in your on the webinar platform. Okay, so to kind of kickstart, one of the questions that has come about is, can the ATO pre-fill data appear for international stocks as well? Ricky, do you know if that appears?
My understanding is no, they don't. ATO does most of the time preview local, I mean like ASX, if you buy and sell ASX or any dividends that you get from ASX, but not my understanding, not for international shares. So you actually have to kind of put that into the to the ATO tax return form, or you have to put that into my tax.
Yeah, cool. Thank you. I suppose the next question was, can you end up paying more taxes than necessary if you don't use a platform like Sharesight? I think it's a very specific question, so it depends on the conditions, but in general, I would say that is the case. That generally speaking, I would say Sharesight would be more accurate. Yeah. But yes, if you have an accountant, please share the reports with your accountant, and they will be able to assess that properly as well. Like I said, neither of us are accountants, nor are we tax advisors. So from our experience, definitely that has been the case. The next question that has come is, currency risk will apply only if we sell short-term. Long-term, say 10 years, should negate that risk. Yeah, not sure exactly how that plays out in terms of currency risk. Have you seen any examples, Ricky?
I mean, you would think that, I mean, if you invest for the long term, that the currency movement kind of evens out. That's what you would think. But obviously, you know, you have seen some cases as well where, you know, like let's say for example, like Australian dollars against US dollars, where that hasn't been the case. You know, if you look at past 5, 7, 8 years, it's only been like going on one directions. So yeah, so I would say it's a bit of a yes and no. That, you know, I guess, I mean, that at least that's what I hope as well. I invest for the long term, hoping that, you know, I just kind of not look at the currency risk, hoping that kind of evens out. You know, you have some years that goes up, some years that goes down, but in the long run, you will even out. But yeah, you have some cases that might not be the case as well. So yeah.
Yeah, that's right. Yeah, and like as retail investors, you know, we don't want to involve ourselves in currency hedging and all of those things. We do want some sort of simplicity, which becomes really easy. What tools and resources are available for researching international investments? I would say, you know, from our friends at Tiger, they have some really cool tools. But in general, I would say, go as wide as possible, and from a variety of sources of research, and yeah, lots of financial websites. There's an entire, like, that part of researching an investment is a huge thing of its own. Obviously, keeping up to date with the latest happenings in the markets is one way, but to go and into fundamental analysis as well, or like research platforms that can provide you with any kind of tools. But I believe there are some really good tools on Tiger. And if you want to see any kind of past performance or like a quick look through or like a back testing, Sharesight has a really nice tool called the Share Checker, which you can check out as well, which basically tells you a hypothetical answer of past performance of a $10,000 amount. And it's really useful to look through those lenses as well. Okay. Do you have any other questions? If not, we might end that there. Thank you so much. Really appreciate you giving us the time to get through to this part of the webinar. So thank you so much.